Hello and welcome to the next instalment of Cooper Parry's Not-for-Profit Team's summer series of mini webinars. Try saying that when you've had a few. Quite a tongue twister, and I wish I'd left it out because this is take number 100 and something plus. So these are a series of short 10 to 15 minute videos to provide some useful nuggets of information for academies as we start to prepare for the year end. My name's Andrew Jeffrey and I'm one of the managers in the not-for-profit team. I'm also a trustee at two multi-academy trusts based in Buckinghamshire and Northamptonshire respectively. So when we come to auditing academies, one of the key risks we identify in our audit planning is fund accounting and the allocation of income and expenditure to a particular fund. The question we're often asked as auditors, particularly when we get to the end of the process of pulling together sets of accounts and the audit, is what is the trust's carry forward and how is that carry forward made up? Sometimes there can be a difference between the expectations of the management accounts, the trustees and the trust management, and what's actually in the statutory accounts. So it's important to make sure that all parties understand their funds and how these funds are made up and how they flow into the next year. So in this session, what we're going to look at is some considerations regarding fund accounting for academies that I've affectionately named Fun with Funds. So in the session, in the next 10 minutes or so, we're going to have a brief refresher on fund accounting in academies. Secondly, the importance of allocating costs through restricted pots. The third point I'd like to cover is capital funds, in particular unspent capital funds and capital allocations at the year end. And then the fourth and final point is a consideration of designated funds and possible uses within academy trusts. So, as you will well be aware, academies come under Companies Act, and their accounts are also prepared in line with the accounts direction, which is issued each year, and the charity sort. And as such, the statutory accounts will include a statement of financial activities, or a SOFA. The SOFA will generally include three columns which represent the following funds. You've got the unrestricted, you've got the restricted, and the restricted fixed asset. And for the purpose of this webinar, I'm going to ignore the LGPS pension scheme liability that sits in the restricted funds. We will be doing another webinar on this. Although one of the largest numbers on the balance sheet within the restricted funds, the actuarial valuation for the accounts has little operational impact on the trust. So we're just going to ignore it for the minute, and you could quite frankly do probably two webinars on the LGPS and the various disclosures within the accounts. So to lift virtually directly from the accounts direction, I'm just going to briefly go through the three main funds. So you've got your unrestricted funds. Unrestricted funds are spent or applied at the discretion of the trustees to further any of the charity's purposes. So there are a lot more freedoms on what you can spend those on. The income that goes into unrestricted funds for academies includes, but not limited to, things like lettings, bank interest, certain donations, consultancy work, and there's a whole list of other possible income streams. But in the context of most academy trusts, it's on an annual basis. It's a small proportion of their total income. But as we said earlier on, there are more flexibilities over what the trust can spend these on. One thing to think about on unrestricted fund is allocating costs against them. So, for example, your lettings income will have more than likely incurred some element of the premises team, the caretaker's costs, possibly some overtime for him or her when they're opening up at weekends. There might be some electricity elements that you need to consider, particularly if you're letting out a sports pitch at the weekends for floodlights and things like that. So you do need to consider what costs will be allocated against unrestricted funds. Second up are the restricted funds, the restricted general funds. And these contain the bulk of the trust's income and expenditure, and contains their revenue resources, their running costs. And these can only be spent, we'll talk about in a minute, on a particular purpose as set out by the grant or the donation in terms of the funding, whatever it Cheers. Finally, there are the restricted fixed asset funds. Now, these are restricted funds which contain resources to be spent on a particular capital asset, or capital purpose, where the condition of the funding states that the asset must be retained and used on an ongoing basis. So, large bits of PPE, improvements to buildings, those are the sort of things which will go in fixed asset fund. For the preparation of the accounts, and again I'm sort of paraphrasing from the accounts direction, the Academy Trust must ensure that their accounting records adequately identify the nature of the income and the associated expenditure that arises during the year. Now, the majority of Academy Trust income streams, including their general annual grant, the GAG, have specific terms and conditions attached which govern their use and application. So most of your income sits within your restricted fund. And from a management account perspective, as most grants are for running the trust in one form or another, it's very easy to pull them all into a single pot and then assume, and they are generally assumed as spent over time. There is a risk, though, that the restricted funds could be incorrectly recognised, spent incorrectly and wrongly disclosed, because you're all lumping it into a single pot, so to speak. So you need to think about how expenditure is allocated to specific grants. Now, if we're going to be realistic and practical about it, most operational costs are for the general running of the trust and for the individual schools to fulfil their objectives. So most unallocated costs usually do form the balance of costs against the GAG. But what is important is to evaluate what costs are spent against other grants with more specific restrictions. For example, keeping records of pupil premium. In this instance, I know that most schools and trusts need to keep that for other purposes, so that information is there. Other grants, sports grants, Year 7 catch-up grants. Because what you don't want to find is that your operational carry-forwards that you've counted on using against future deficits, and now, as many of you will be aware in preparing your budgets, deficits are appearing more and more frequently into the future on those plans, so it's not something that's not happening. So if you're planning to use them to cover those deficits, if they're made up of grants with specific restrictions, you'll find that you won't be able to use them quite the way you wanted to. So it's just being mindful that you understand how your restricted funds are made up and making sure that costs are allocated appropriately against them. So moving on to capital funds, in a simple world, all your capital funding will be spent during the year, and the value of your fixed asset fund will essentially be the net book value of the fixed assets in your accounts. Because all the expenditure will be capitalised onto the balance sheet, and the only costs going through the fund will be the depreciation. However, at the year end, because a lot of projects tend to go over the summer holidays when schools are a bit quieter, it can often prove a bit more tricky. Particularly also when looking at the recognition of capital grants income, because capital grants are generally recognised on entitlement. For example, most SIF grants are recognised in full in the accounts when they are awarded, and not when the income comes in, and they're quite often phased payments. So you have them July, August, September, October, which means that you quite often get a lot of accrued income to take into account into your capital fund, and this can lead to quite a large unspent capital balance at the year end, particularly if the work is only partially undertaken over the summer. So things like SIF projects, as I mentioned, particularly involve large building projects, so you just need to be aware and mindful of the timing of expenditure and income. And on some projects you've now got loan elements to factor in, and they need to be factored into the makeup of the fund. But on those, if you're unsure on how they form part of the fund, I would seek your accountants or whoever's preparing your accounts advice on those disclosures. One thing I'd like to highlight is often assets are funded from revenue sources, and we've seen in the past, particularly where assets have already been posted up to the balance sheet, have already been capitalised, that no one has then recognised that because it's funded from revenue, we need to do a transfer from revenue into the fixed asset fund. So take that income out of the revenue fund. And as assets tend to be high value, it can be a difficult conversation to have. Use an example of, say, £40,000 that you spent out of general fund, and that has to be moved out of what you assumed was your operational surplus. So we've then had to reduce your operational surplus. Now that can be quite, using the 40,000 as an example, that is quite a sizable figure. That is effectively a teaching member of staff with on costs that you've effectively taken out of your budget, your operational, because you're reducing your operational surplus. So it's just something to be mindful of, and making sure you're happy with how the fixed asset fund is made up. My final point I'd like to touch on is designated funds. Now, if a trust is lucky enough to have built up a significant unspent unrestricted fund, particularly if there's large conversion balances carried over from the local authority days, and although schools are struggling with future budgets, there are quite a few which have built up a healthy unrestricted fund. It's worth considering whether trustees should designate any funds. So that's the beauty of a designated fund, is that it allows trustees to allocate funds for a future project, but keeps them within that unrestricted pool. So if the trust needs the funds for other purposes later on, suddenly that project is no longer viable, you don't want to do that project, or some other emergency comes out, you can just remove the designation and it goes back into the unrestricted funds. Now, if a restriction's been put on that income or those funds, that becomes a lot harder to do, to remove the restriction. It also helps any external users of the financial statements, and internal parties for that matter, see that the trust has a purpose for those funds, that they're not just sort of building up funds for no reason at all, particularly as most funds are intended to be spent on the education of the children within that year. So if you can demonstrate to readers of the financial statements that actually these are being set aside for an alternative purpose, then it will help them understand the direction and the future plans of the trust. So just to recap, firstly, consider grants and what costs are being spent against them. It's important to make sure you're happy with what grants are being carried over into the next year, and that these allocations are aligned with your statutory accounts, so everyone is clear on the carry forward position into the next year. On the similar lines, make sure you're happy with your capital funds being carried over, so you know what balances have been accrued in terms of accrued income and any costs that are being carried forward. So, sorry, not carried forward, accrued as well. So just make sure that everyone's happy with the capital funds that go into the next year. Also, and my third point is consider using designated funds to show users of the trust. Show users of the financial statement, that the trust has plans for any unrestricted funds, so they don't feel you're amassing funds as for no particular purpose. So they're my 3 or 4 key points with regards to funds. Thank you for listening. I appreciate the last few months have been very tough, particularly for schools, with the restrictions and impact of COVID, and the government effectively appearing to use schools as a tester for many things. But I do hope you have some time to relax over the summer before all the excitement starts again in September. If you have any questions on funds, anything else relating to academies, or just generally anything else at all, then please do contact me on andrewj@parry.co.uk, or anyone else in the NFP team. So thank you very much for listening, and take care.